All right, so you're thinking about refinancing, you're wondering what the process is. This video is for you. I'm gonna go through everything step by step and explain everything that you need to know in order to get a refinance. I'm a mortgage broker. I've been doing this for over 20 years, helping people navigate the murky waters of the home lending process. And on this channel, I share the tips and tricks that I've learned over the years, and hopefully you can use them to have a better experience in your own journey. Do me a favor, tap that like button, leave your comments below. I love answering questions. And if you're not already a subscriber, do me a huge favor, tap that subscribe button so you get more videos like this. All right, so let's talk about refinancing, what the process is. The first place to start really though, guys, is to explain exactly what is a refinance. So for you financial pros, bear with me for a moment here, but a refinance, it's real simple, guys. You're paying off an existing loan and replacing it with a new loan, hence refinancing. Most of you guys, you probably bought your house, you used a purchase loan and you had some form of a down payment, maybe you did 100% financing, whatever. And over the course of time, you've built up some equity, and maybe you want to either put that equity to work, do a debt consolidation, refinance, cash out for home improvements, maybe a large purchase, or maybe rates are lower than what you started off with and you want to lower your interest rate. Either way, the process of getting it done is going to be through a refinance. All right, so let's talk about the process of refinancing. Step one is real simple, guys. It all just comes down to math. And in fact, this is one of the most beautiful things about refinancing compared to a purchase loan, is that there's not really many cooks in the kitchen. You know, when you buy a house, you got real estate agents, you got the seller, you got all these different inspectors, you got emotions, right? There's a lot of decisions being made based off of how you feel about things. Well, you already bought the house. You've made that bed. You got to sleep in it at this point. We're talking about changing the financing though, refinancing, right? And the beauty of it is it all just comes down to the numbers. It's real simple. It's math. It either pencils or it doesn't. It either gets you the money you need for that home improvement or it doesn't. You either lower your rate or you don't. It doesn't matter what color the house is or if you like the schools in the neighborhood. You've already bought off on all that stuff. So a refi, it all comes down to the numbers. And so step one in the process of refinancing is to really figure out if the numbers make sense. And of course, that's where a mortgage broker comes into play, where we provide you with quotes on interest rates, estimates on fees. We basically help figure out your options for potentially refinancing and then provide you the data that you need in order to make an educated decision. Now, step two is figuring out if you qualify for the refinance that you're interested in doing. You know, the loan that the numbers penciled on. Well, now you got to make sure that you actually qualify for that. And again, that's where your mortgage broker, we're going to basically review your income, your assets, your credit. We're going to take a look at property comparable sales to get an estimate of how much equity you have. We're going to pre-underwrite your file. We're basically going to do all the things that you can do up front to make sure that you're actually going to be able to get the loan that you apply for. All right, so the numbers pencil, you qualify for the loan that you want to do. What's the next step? The next step in the process, step three, is going to be submitting your complete loan application along with your supporting documentation to the lender. And again, that's where your mortgage broker is going to come into play. We do all that for you. So you just sit back, relax, enjoy the show. We'll keep you up to date throughout the process. But again, you're not buying a house, you're refinancing. This should not be a stressful process. It's very streamlined. It's easy to do. It all just came down to the numbers. There's no emotions involved in this stuff, or at least there should not be. Now, within 3 days of submitting your loan application to the lender, which usually, I mean, honestly, it's like the first day. We do it actually within like the first 15 minutes of submitting your application. But not all lenders are built the same. Some don't use great technology and they take forever. At the latest, you're gonna get it within 3 business days. If you're working with us, it'll be very quickly. It's down to the minutes. But basically, you're gonna get your initial disclosure package that gets sent to you via email for DocuSign. Yes, you can do it for snail mail, but to be honest, I can't think of a client that's requested that for years now. Doing the e-sign is super easy. You can do it from your phone, computer, tablet, whatever. And you're signing your initial disclosures. Now, one of the nice things about this, again, this isn't a stressful process. This is very streamlined. And step one was figuring out if the numbers worked. Well, part of that process was getting a loan estimate. In your initial disclosure package, you will have another loan estimate. So again, this whole process is going to be very familiar, very fluid. Now, one of the documents that you're going to sign in your initial package is called an intent to proceed. Now, the lender is going to require that to be signed in order for them to order the appraisal and charge you for the appraisal fee. Lenders aren't in the business of paying for appraisals for people. That's a gimmick during refi booms that brokers do to draw up business, but you're not going to get a freebie appraisal in this market. So the way that it works is, in order for the lender to not have to cover the appraisal up front, you need to sign that intent to proceed. So that'll be part of the process. Once you sign that, mind you, you're not committing to doing the transaction. What you are doing is acknowledging that you've received your initial disclosures, and at this point, you're proceeding. So the lender will then order the appraisal, typically done through a third-party appraisal management company. I'm not going to go into the weeds on why it's done that way, but basically separating church and state between the lender, the loan officer, the appraiser, all that stuff. So the appraisal gets ordered, and at that point in time, you will receive an electronic invoice. Basically, you're going to get a link to pay for that appraisal because the appraiser requires to be paid up front. They're a third party. Now, one more thing, we put together this awesome down payment assistance guide. It's free. Go ahead and click that link to download it. It's an awesome resource to help you along through the process. So step 4, you've signed your intent to proceed. Now the appraisal is ordered. You're paying for that appraisal fee up front. Now the appraiser is going to call you and schedule the appointment to do the inspection. Depending on what type of appraisal they're doing, they may need to come inside of the house. Maybe they just need access to the exterior. Maybe they just need some data or pictures from you. Regardless, you're going to need to engage with the appraiser, just over the phone. But basically, you're going to need to engage with them. And by the way, you will play a role in how long it takes to get this stuff done. For instance, if the appraiser goes to schedule an appointment with you and you're like, yeah, you can't come out for 3 weeks. Well, guess what? You just moved your whole process out 3 weeks. Ideally, perfect world, you're doing it as soon as possible. Now, the appraiser is going to come out to the property at some point in time. And in the interim, step 5 is going to be taking place. And that's where the lender is reviewing your application, your income documentation, all the stuff that's been submitted, and they are underwriting your loan to ensure that you meet the guidelines for the loan that you're applying for. And they will issue what is called a conditional loan approval, meaning that they're issuing a commitment to lend as long as you can meet the conditions that they've listed on this approval. And typically there's a lot of boilerplate conditions. One of them, by the way, is going to be that appraisal that's already in process. So there's a method to the madness behind why certain things are taking place when they do. Now, at this time, your mortgage broker, probably their processor, is going to reach out to you, and they're going to ask you for anything that they might need from you that the lender's requesting. Now, typically, like for us, we're super thorough up front. So like us coming back to you for things, we don't really need to come back for much, usually not even for really anything, because we've done so much stuff up front. But a lot of times, not all lenders are alike, and they're kind of sloppy up front. They don't ask for a lot of stuff, and so they're going to have a lot of conditions. They're going to come back to you with a whole list of things that they need you to provide to the lender. So it's kind of one of those things. You can do as much up front and kind of have a smooth lending process, or you can kind of dilly-dally, and during the process, you're going to make the lender ask for everything, which sometimes can add stress to the process, because now, instead of doing everything before you've started the loan process, you're now in the midst of trying to get your loan done. And although there's not an exact timetable, your rate lock might be the thing that's pushing that timeline. All right, so the lender's approved your loan, and now you've provided all the documentation that was asked from you. Your mortgage broker, maybe they're doing stuff behind the scenes that they're not even bothering you with that the lender needed. And there's also stuff that the lender's going to be doing behind the scenes: fraud checks, verifications, property verifications. There's all sorts of things that it's amazing what technology does these days, where they're basically making sure that they're doing all of their due diligence, risk management, and all that stuff's taking place. And meanwhile, remember, we had this appraisal in process. So let's say that your inspection has been completed, the appraiser has completed the report, and now they've provided that report. At this point, we're going to want to look at this report and make sure that the value that came in on the report meets the required value for whatever transaction you're applying for. Because again, your equity in a refinance typically will play a role in what rate you get, what type of loan you qualify for, and also if you're doing debt consolidation or pulling equity out for home improvement, obviously the more equity you have, the more you can tap into and vice versa. So the appraisal plays an important role. But all the documentation is in, the lender's approved your loan, the appraisal's in. At this point, you will be cleared to close, meaning that the lender has reviewed everything that they need to review and they are ready for you to sign the loan documents. And this is gonna be the next step, and this is gonna be coordinated by your mortgage broker, probably their processor, along with the escrow officer that's handling the escrow for your transaction. Escrow is this middleman, third party that handles all the money in your transaction. Now, they're gonna coordinate your signing. Most likely what's gonna happen is they're gonna schedule a time for a notary to actually come out to your house, or if you don't want anybody to come to your house, I get it. You could do it at Starbucks, in your front yard, whatever. People do signings all over the place. You're gonna have your signing scheduled with a notary, and they'll set up a time to come out, sit down with you, and put ink on paper on the loan that you applied for and were approved for. All right, so once you've signed your loan documents, the notary, they're gonna leave you with a copy of them, and then they're gonna take the signed copy and they're gonna give that back to escrow. And behind the scenes, what's going on is escrow is gonna actually send that package or a good portion of it to the lender, and the lender is essentially making sure that all the stuff is signed and that all the I's are dotted, the T's are crossed, everything is there, because these are legal documents. Escrow is doing the same on their end. And once everything has been confirmed, that it's all signed, that everything's balanced, the last step to the process is that the lender is going to fund your loan, which is just an industry term for they're gonna send the money, basically. They're gonna wire the funds to the escrow company. And at that point, escrow, which again, they're that third party, unbiased middleman that handles all the money in your transaction, they're gonna pay off your existing loan. They're gonna pay off any other creditors that you included in your transaction. Like let's say you were doing a debt consolidation refinance and you're paying off some credit cards or car loans or whatever. They're gonna pay those people off at that time. Or maybe you're getting paid. Maybe you decided you're doing some home improvements or you're paying for college or whatever the case is, you were getting some money back. Escrow is gonna send that money to you. So your loan is funded, it is recorded with the county recorder's office, that deed of trust that you signed, it's now been recorded, your transaction is done. Now something to point out, because this always causes confusion, your first mortgage payment is not gonna be due immediately. When you do a loan, whether you're buying a house or refinancing, it's more confusing when you're refinancing because you've been used to making a monthly payment every month, and then now you're gonna have this short break in payments, whereas when you're buying a house, you weren't making a payment to begin with, so it's a little easier to wrap your head around. But when you're doing a mortgage, behind the scenes, you're really actually, mortgages are paid in arrears. So like when you make your September mortgage payment, you're actually paying the interest that was due for the month of August. If you do a refinance, and let's say that your transaction closes in September, in your fees for that refinance, it'll include the interest that was due for the remaining days in the month of September. Now, you will not have a mortgage payment for the month of October. So you're gonna skip a payment, basically. Now, you're not really skipping a payment. You're just basically not starting your first payment for a month. So don't think that you're getting away with anything for free. You will pay for it at some point in time if you stay in that loan for 30 years or whatever. But in this example, if you closed in September, you wouldn't have a payment in October. Your first payment would be due November 1st. So that's a refinance from A to Z. It's pretty simple, guys. And like I said, the beauty of it is that it all just comes down to the numbers. There's no emotions involved. If you're interested in figuring out if a refinance makes sense for you, reach out to our team. You can get a hold of us in the description link below. And if you haven't already, do me a huge favor. If you got value out of this, hit that like button and make sure to tap that subscribe, and I'll see you on the next video.